Let's get some insights in the news shaping the markets. For that, we welcome in Eric Beiley, Managing Director, Wealth Manager at the Beiley Group at Stewart Partners. Good morning to you. How are you feeling about a market that was hitting highs and now is showing some pullbacks?
Yeah, I think this is just the reality of the entire financial and economic environment we're in, right? Last week, we had the euphoria reaction to the election. You had the Fed cut rates, and you just saw a ton of upside momentum. And now this week, in my view, the rate environment is concerning. You're seeing the long end of the curve, the 10-year yield, the 30-year yield continue to creep up. And so investors are taking a pause, right? They're pulling some money out right now, kind of reflecting where everything is and looking forward and seeing, into next year what's going to happen. We're going to have a new administration. It's unclear about Fed policy or where the Fed goes. So rightfully so. I think investors are somewhat cautious, and you're seeing that today with this sell-off.
All right, so is there opportunity? So if people are selling off, maybe taking some profits, does that mean when we do see selling upon selling, maybe that's a buying opportunity? Does it work both ways?
Yeah, I mean, if you look at this year, the sell-offs have proven to be good buying opportunities. So, we haven't really had a significant pullback. I think 110% pullback this whole year. So, yeah, my advice to people would be to sit back, see. We have Nvidia reporting next week. That's certainly going to be a big impact on the markets to see if the AI and the semiconductor space is still performing well. And if it is, yeah, if we continue to see caution and a sell-off, absolutely, I think you do put some assets to work and buy certain names or certain sectors that look attractive.
So are you into the dividend aristocrats? Are those names that you've been buying this year?
Yeah, I mean, for me, this is a long-term investment strategy, right? A lot of these names are big, well-known. You could call them blue chip names. And so these are companies that have proven in all types of economic cycles to perform well because they've increased their payouts to shareholders every year for 25 consecutive years. That's pretty hard to do. If you think back and look at all the different economic cycles, the environments we're in, these companies continue to reward their shareholders and grow their dividend. And to me, that's very important. And there's several names in there that continue to outperform the markets, which is hard to do if you look at their long-term returns. So absolutely, I like the dividend aristocrat strategy. And for those who can reinvest those dividends, that's where the real bang for your buck is going to come by compounding your growth, right? You reinvest those dividends back into more of the shares, and that's going to pay off down the road.
Right. You like financials, you said, also technology. What kind of financials? What kind of technologies? There's so much within that subsectors.
Yeah, even today, if you look at the sectors, like I think insurance is doing quite well, the banking, the capital market sector, right? I think the view now with this new administration coming in is we're going to have less regulatory environment, and that's going to be beneficial for big investment banking firms, big national banks. You're going to have more M&A. You're going to have more deals, possibly more IPOs. So that's very positive for the financial sectors. And on top of that, this is a space that really got hit very hard when rates really skyrocketed back in 22. So their valuations across the board, from regional banks to insurers, are still very cheap. And so that's why I like financials.
Right. And then within technology, what areas of technology?
Yeah, I mean, obviously the big Mag 7s, I think those are names that all investors should have some exposure to because they've proven to continue to, just produce tremendous results, their earnings, their growth. And so you need exposure to them. In terms of specific sectors, I do like the semis, right? The semiconductors, it's been a little more of a name-by-name basis, stock picking, because some have had good results and their stocks have gone higher. And others, unfortunately, we've seen on the misses. We just saw one last night with AMAT. You saw, the hits these stocks can take. So from an investor standpoint, you need to be cautious with what you're buying and maybe stick to a broader based investment like a fund or an ETF.
Right. Okay. Understood. That being said, here, do you think we're in this still? Still see higher rates. You still see a strong dollar. The Fed likely to cut at least once between December and January, or both times. What do you think is going to happen here?
I think December, yes. I think another quarter point like we saw last week. I think it's cloudier as you get into the new administration and into next year, what's going to happen. Powell has indicated he just had an interview, I believe it was yesterday, and clearly showed that, the strong economy might warrant having higher rates than expected. And I think you're seeing that in the yield curve, right? The longer end of the rates, the yield curve, the 10-year, the 30-year are creeping higher. And that's a concern. And that's an indication that we might not see as many rate cuts as initially the markets had priced in. Plus, we could see a change, right? With the Trump administration, it's unclear. Clearly, that the administration has indicated they want lower rates, and so there could be, issues with Powell. So we'll have to see going into 25.
And you mentioned the 10-year, for example. I mean, that right now is at a 5-month high. So at this point, when you're doing a portfolio and you had financials and tech and some of the dividend players as well, how about a recommendation in the world of fixed income? What would you do there?
Yeah, I mean, again, with this uncertainty, and the short end is still offering you, mid to high fours, right? Where the Fed funds rate is. So to park money in a money market or short-term CDs is not a bad place as a hedge against uncertainty. On the other hand, for those looking for a longer term investment, what I like are for higher net worth investors. I absolutely like the tax-free municipal bond space. This offers very attractive after-tax returns and extremely high credit quality. Munis have proven to be extremely safe investments. For those searching for higher yields, I do like certain financial, fixed income from financials like preferreds, which are often issued by financial firms. They have some tax advantages and higher yields that are attractive, but they also can be more volatile. But over time, they have proven to be a very good asset class to invest in.
Thank you so much, Eric Beiley. Great to see you. The Beiley Group at Steward Partners. Thank you, Eric. Appreciate
Nicole,
it.
thanks a lot.